This is Homebuyer Radio with home loan expert Dan Morales. Dan has been one of the nation's leading mortgage lenders since 1991, and weekly he shares with you valuable insight into the home buying process. Whether it's your first home or not, Dan will help you have a better understanding of the home buying process. Let's get started with this week's episode. Dan, what do you have for us this week?
Hey, thanks, Pat. And we're back with Homebuyer Radio. This is episode number 76. And this week, what I wanted to talk about is adjustable rate mortgages. Okay, adjustable rate mortgages have gotten this really bad rap, because of the housing crisis and housing bubble, where oh my gosh, people took an adjustable rate mortgage and all they did was get hosed, and it helped them to lose their house. Blah blah blah. There is a lot of truth to that. Okay, adjustable rate mortgages that were done as part of what was known as the Alt-A business or the subprime business. A lot of those adjustable rate mortgages had terms and conditions that were such that you as a homeowner were going to get waxed. Okay, you were going to lose, and they were designed to make sure that you lose. Okay, for those who took out an adjustable rate mortgage during that same time, let's say pre-housing bubble, if you will, and they took out a conventional adjustable rate mortgage. Okay, there's a difference here. You have a conventional adjustable rate mortgage versus, let's say, what was known as an Alt-A or a subprime adjustable rate mortgage. Okay, they're both mortgages that have an adjustable rate feature, meaning that your rate can and likely would change at some point in time in the future. Okay, pardon me. The terms and how your rate can change is where there's the big difference between the two. Okay, typically the subprime or Alt-A adjustable rate mortgages had terms that were super unfavorable for the homeowner, meaning that you likely were only going to see your interest rate go up, and the terms were such that you were just going to lose any way that you sliced it. Okay, a conventional adjustable rate mortgage worked far different than that. Okay, I can tell you that prior to the housing bubble, right? I was lending. I have been lending since 1991. So I've seen cycles kind of come and go, right? But prior to the housing bubble, we did a handful of adjustable rate mortgages for clients because it fit what their long-term goals and objectives were. Okay, I can tell you that I had clients that were able to keep their house because of their adjustable rate mortgage, right? Because what had happened is their adjustable rate mortgage had actually adjusted down in interest rate, and that down tick in interest rate was such that it allowed them to be able to continue to afford their mortgage, where had that not happened, they wouldn't have likely been able to continue to afford the mortgage and possibly could have lost their house if their payment would not have gone down because of differences in income for them, and they may not have been able to sell the house because values of homes had gone down for that period of time, right? So an adjustable rate mortgage isn't necessarily always a bad thing as long as you understand it, right? And with rates starting to rise and go up, you're going to see that adjustable rate mortgages are going to come back into the mainstream. Okay, we're already starting to see it with some programs that we offer that I think are unique and special. And what happens is, most adjustable rate mortgages are what they call a hybrid adjustable rate. Okay, we'll talk about that in the weeks to come. But this week, what I really wanted to talk about is I just wanted to talk about the fact that they're out there. Okay, so if you're contemplating buying a house, an adjustable rate option may be appropriate for you. You just want to understand the terms. Okay, now I should say that I personally have always borrowed on adjustable rate mortgages. I've had one fixed rate mortgage my entire lifetime, and I've had a lot of mortgages. Okay, I've always borrowed on adjustable rate mortgages, and in all honesty, I've always won and have outpaced the market as far as my cost of money because I understand how they work. I understand how to use them correctly to benefit myself. And I can tell you for a number of years after the housing bubble, my adjustable rate mortgage on my house was anywhere from probably 2.875 to, at the point where I sold it, I think my rate was like 3.25, right? And I just sold that thing all of just under 2 years ago. Okay. So, I got to be honest with you. They don't scare me because I understand them. And if you understand them too, you're not likely going to be as scared either. You might realize that, all this time that you've been borrowing on a fixed rate mortgage or you're contemplating a fixed rate mortgage, you may actually end up, paying more than what you needed to for your mortgage. So we're going to maybe take a little bit of a road trip down the map of adjustable rate mortgages and talk about how they may be something that could benefit you as you look at buying a house. So we'll talk a little bit more about that in next week's podcast. Do me a favor, make sure you go on iTunes and leave a review. Let people know that you enjoy the podcast, and if you can, share it with your friends and family.
Homebuyer Radio is a production of Dan Morales, home lending expert with North Point Bank, NMLS number 709729. Dan can be reached at 616-931-4629 or online at danmorales.com. Thanks for listening, and we invite your questions and show ideas at homebuyerradio.com. All loans are subject to credit approval. This is not a commitment to lend. North Point Bank is an equal housing lender. All rates reserved.